Hey, good morning, everybody. Today is Thursday, January 28th, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors, Spectrum Analyzer to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 13 came from integrated utilities, 8 came from utility networks, 7 came from packaged foods, 5 came from precious metal mining, and rounding out the top 5, we had 5 banks. Yesterday was kind of an unusual day in the market, and this is kind of an unusual list. We have not seen a lot of any of these industry groups recently, and we'll keep an eye out to see if we see more of them in the future. Let's start today by taking a quick look at the Russell 2000. Russell yesterday closed lower, but if you notice, the low of the day yesterday was above the low of the day the prior day, and the high of the day was above the high of the prior day. That's mildly bullish. We have not seen a whole lot of bullish out of the Russell 2000, and as you know, I think the Russell 2000 is the key to the market going forward here. And so a mildly bullish day on a pretty yuck day in the market overall is encouraging. We need to see the Russell take out resistance up here in the 1040 area if we're going to get more bullish on the market overall. Let's see what the NASDAQ Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market. And to my way of thinking, that's the most important element. So let's take a brief look at the market. Stocks reversed small gains late in the session yesterday as the market closed sharply lower. Trading volume was heavier than the prior day, giving us a distribution day on both the S&P and the NASDAQ. Distribution, or institutional selling, this early in a confirmed uptrend may be a sign of trouble for the bulls, and has caused Investors Business Daily to change their market view from confirmed uptrend to an uptrend under pressure. That noted, according to our market timing model, we remain on a primary sell signal with a secondary aggressive buy signal. An aggressive buy signal indicates that aggressive traders can buy stocks but should not be employing margin at this point. More conservative traders should continue to accumulate cash. In spite of the sharp sell-off, the damage in the overall market wasn't tremendous yesterday. Declining issues outpaced advancers, but only by a little bit better than 3-2. The New York Stock Exchange advanced decline line continues to look considerably more bearish than bullish. New lows bettered new highs, but by a reasonable level yesterday, and our new high, new low indicator, which measures the rate of change in daily new highs versus the rate of change in daily new lows, and is typically the first indicator to change, positive or negative, has switched to a buy rating on the market. That noted, 2 days ago the McClellan oscillator turned positive, indicating a buy signal on the market. Yesterday it went back to negative. Large capitalization stocks bettered small yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. Okay, NASDAQ yesterday was down 99.5 points, or 2.18%. We closed at 4468, and importantly, we undercut support resistance right here in the 4506 area. We closed near the low of the day, but had bounced a little bit off of the low. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been in a confirmed uptrend since January 26th, and we have one distribution day. Again, distribution this early in the confirmed uptrend is a cause of concern for the bulls. Right now, the NASDAQ Composite is bracketed by support down here in the 4292 area, and we have minor resistance up here in the 4506 range. If we were to recapture that, our next level of resistance would be this trend line. This trend line is significant because it goes all the way back to the beginning of the bull market back in 2009. Let's see what the S&P 500 is up to. S&P yesterday was a whole lot healthier than the NASDAQ. We were down 20.68 points, but that's only 1.09%. The S&P closed at 1882, and notice how the S&P held support down here in the 1867 area, unlike the NASDAQ, which undercut its support level. Trading volume yesterday was higher than the prior day, which gives us a distribution day. Again, we are in a confirmed uptrend in the market, but Investors Business Daily has gone to an uptrend under pressure. The distribution yesterday is a bit of a concern for the bulls, as we've noted before. Right now, the S&P is bracketed by support down here in the 1867 area and resistance at this trend line. While Investors Business Daily has us in an uptrend under pressure, our market timing model is on a primary sell signal. But we have a secondary aggressive buy signal. What that means is aggressive traders can buy stocks at this point but shouldn't be employing margin. More conservative traders should continue to accumulate cash. Just a quick note, Facebook yesterday reported earnings after the close. Earnings were extremely good, much better than anticipated, and the stock was indicating up about 12% after the close yesterday. Facebook provides a social networking platform, enabling members to stay connected with friends and family via Facebook.com. I guess we all know what Facebook does. We have this trend line in Facebook. It's an awfully steep trend line, and you would have to be an awfully aggressive trader to buy Facebook on a break above that trend line. But we are on an aggressive buy signal, and aggressive traders may want to take a look at Facebook here. If we break above this trend line on a significant increase in volume, we want to see at least 140% of average daily volume. Keep in mind, this is a very volatile market. If you consider yourself an aggressive trader and you're going to buy stocks here, keep your stops in place, keep them tight, and be careful. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.